Unacademy could be acquired by offline coaching center chain Allen for just $800 million. Welcome to Backstage with Millionaires. I'm Caleb Friesen, your host, and that is a 75% drop in Unacademy's peak valuation of $3.4 billion. So what's happening here? Well, according to this ET article, Unacademy has been negotiating this potential merger for several months now. In fact, in July of this year, when The Morning Context wrote a detailed piece talking about Unacademy's struggles and potential acquisition, Gaurav Munjal, the CEO of Unacademy, took to X, saying that the company will have its best year in terms of growth and profitability, and told his followers to ignore the rumors. But it looks like there may have been some truth to these rumors after all. According to this latest ET article, the deal's fate depends on approval from Allen's Maheshwari family, specifically the brothers, who still haven't signed off yet. And one of the big issues here is Unacademy's $160 million in cash reserves, which is making it tricky to figure out the company's actual value. And if this merger actually happens, then Unacademy's founders, Gaurav Munjal, Saini, and Sumit Jain, are expected to step away from the business. The talks are being led by Gaurav himself, along with Allen's investor, Bodhi, which invested $600 million in Allen 2 years back. Now, speaking of their financials, Allen posted revenue of 2,277 crore rupees with a net profit of 429 crore rupees in FY23, while Unacademy posted revenue of 988 crore rupees with a loss of 631 crore rupees in FY24. Unacademy has been facing challenges ever since the 2020 edtech boom ended, and their revenue has also remained flat for the last 2 years. Now, they have tried to strengthen their offline play, but they've been struggling with layoffs and also their senior executives leaving the company at the same time. And we here at Backstage with Millionaires actually did a deep dive into Unacademy's business a couple of months back, and you can go check that video out in the top right corner of your screen to understand what went wrong with their business. All right, next up in the news, Swiggy's Q2 FY25 financials are out, and the company has a clear goal. They want to be profitable by late 2025, but they're not slowing down on growth in order to get there. So Swiggy's core food delivery business has already been profitable since last year, and in Q2 FY25, its adjusted EBITDA margins reached 1.6%, and the company expects these margins to grow to nearly 5% in the medium term. And they've achieved this through higher ad revenue and also reduced delivery costs thanks to technology upgrades. And then at the same time, Swiggy is pushing hard into quick commerce and 10-minute food delivery, and the company plans to double its dark store count from 609 to over 1,000 in just the next 4 months. Also, their 10-minute food delivery service Bolt, which launched just 2 months back, already handles 5% of all of Swiggy's food orders. And these rapid delivery orders have average order values similar to their regular food delivery orders, making the model look sustainable in the long term. Now let's take a look at Instamart, Swiggy's quick commerce arm. So it's seeing better economics now, which are being driven by advertising revenue from consumer goods companies. Swiggy is expecting its take rates, the percentage it earns per order, to hit 20 to 22% over time, and 7 major cities are already profitable for Instamart, with 75% of stores in these locations being profitable. And here are the high numbers. Swiggy's revenue grew to 3,601 crore rupees in Q2 FY25, up from 2,763 crore rupees in Q2 FY24, while their losses were slightly reduced from 657 crore rupees in Q2 of FY24 to 627 crore rupees in Q2 of FY25. And despite concerns about an economic slowdown, Swiggy's leadership remains confident. They believe that food delivery is growing faster than the overall food market. And in case you want to dig a little bit deeper into Swiggy's numbers, I'll leave a link to their Q2 FY25 results in the description down below. All right, next up in the news, the RBI has officially lifted its 2-month ban on Sachin Bansal's Navi Finserv. So back in October, Navi was barred from lending due to concerns about excessive interest rates and regulatory non-compliance. Since then, though, the company has worked closely with the RBI, undergoing multiple rounds of discussions to fix the issues, and Navi has now revamped its systems focused on fair loan pricing and better governance. And this is great news for the company, since lending is Navi's core business driver, with more than 80% of its revenue coming from interest that it earned on lending activities in FY24. All right, next up in the news, InfoEdge has filed an FIR against Rahul Yadav, the controversial founder of 4B Networks, for allegedly misusing company funds. So InfoEdge had invested 280 crore rupees in 4B Networks, owning 65% of the company, but by mid of 2023, red flags started appearing firing when Yadav's team reportedly failed to provide basic financial information, vendors weren't getting paid, salaries were delayed, and serious questions arose about where the money was going. And so this led InfoEdge to launch a forensic audit in June of 2023, and things took an even darker turn when Yadav reportedly tried to raise additional funding from a Dubai-based property dealer at a valuation 99% lower than the previous round. And so ultimately, InfoEdge had no choice but to completely write off their entire 280 crore rupee investment. But this isn't Rahul's first controversy. Back in 2012, he founded Housing.com and secured 550 crore rupees from SoftBank, but then in 2015, he was forced out of the company for sending angry emails to employees and investors, even accusing Sequoia Capital's Shailendra Singh of unethical practices. All right, next up in the news, let's talk about Zepto. So a Reddit post about Zepto's work culture has gone viral, and if it's true, then it raises some serious questions. So according to this Reddit user who claims to be a Zepto employee, the company has a work environment that's anything but ordinary. So first of all, let's talk about what this post says about Adit Palicha, the co-founder and CEO of Zepto. So the post alleges that Adit starts his day at 2 p.m. because apparently he can't wake up early. And so this user claims that this leads to meetings being scheduled as late as 2 a.m. And it doesn't end there either, because the post says that Zepto's tech team reportedly works until 1 a.m. with some employees allegedly taking pills to stay awake. Then there's the hiring and firing situation. So according to the post, 10 employees leave Zepto every single week, but the company hires 20 more to replace them. And so it paints a picture of a company that has constant attrition. But now here's where things get really interesting for us as consumers. The Reddit user accuses Zepto of using dark patterns to manipulate prices. So one claim is that customers with phones costing more than 30,000 rupees are charged higher prices for the same products. Now, we here at Backstage with Millionaires can't verify this. We did run some tests, but they weren't conclusive. But some users on X have shared screenshots comparing the prices of Eggo's eggs on different phones. And again, this isn't really conclusive evidence, but there are also claims that Zepto sneaks in delivery fees even for users who are eligible for free delivery unless they manually remove it. So how did Adit Palicha respond to all of this? Did he panic? Did he deny the claims? Well, his reaction was actually really straightforward and a little bit cheeky. He said he has nothing against work-life balance, and he even recommends it for his competitors. All right, next up in the news, a massive fire has destroyed Shiprocket's warehouse in Bhidwani, Maharashtra, wiping out inventory worth hundreds of crores and disrupting supply chains for at least 61 brands, including Sugar, M-Caffeine, and Beastlive. Now, thankfully, no lives were lost here, but the incident has caused major issues for businesses that rely on Shiprocket, which handles 5% of India's e-commerce shipments. And this fire raises serious concerns about safety protocols in third-party fulfillment centers, and Shiprocket says that they're investigating the cause and working on measures to prevent future incidents while also ensuring business continuity for affected partners. And now just a couple of quick little updates here. First of all, Hero Electric, along with Benling India and Okinawa Autotech, have been accused of fraud trying to avail subsidies under FAME 2 scheme, but Hero Electric has moved to the Delhi High Court, challenging the Ministry of Corporate Affairs' order for a serious fraud investigation office probe into the matter. And then the next little news item here is that Ola Electric's market share had climbed up to 30% in October, but now it's fallen back down to 24.5% in November. Bhavesh Agrawal also took to X to announce that they're going to be increasing Ola Electric's store count from 800 to 4,000 in the month of December. And now let's move into the funding news segment for today's video. This week, Indian startups raised just $45 million, which is significantly lower than last week, and it's way below the trend line. So let's look at some of the companies that raised funds this week. The first one I want to talk about here is Bengaluru-based electric motorcycle maker Ultraviolet, the company that's known for the F99, and they've raised $15.3 million. Following that, we have Mumbai-based D2C food brand Wicked Good, which makes pasta, noodles, and chips, and you might remember them from their appearance on Shark Tank India Season 2. So they've raised $2.36 million. Next, we have Mangaluru-based dinnerware manufacturer AgriLeaf, which makes biodegradable products using using fallen areca leaves, and they raised $2 million. And then finally, we have healthcare diagnostic startup Neuronics Lab, which is making a device called Muon, which can analyze and detect diseases in just 10 minutes using just 2 drops of blood. Kind of sounds a little bit like Theranos, but then again, we are living in the era of AI now. Things have changed quite a bit, so maybe this is actually possible. They've raised $700,000 in their seed round. All right, that is all the startup news that I have for you guys this week. If you haven't already checked it out, do check out the video that we just posted this week about the greatest startup acquisitions in Indian history. You can find that video in the top right corner of your screen. But either way, I'm Caleb Friesen, and this has been Backstage with Millionaires. I'll catch you in the next one.